$3,000 day in the market, and you guys know I come with receipts. This is just one live account at $1,000 P&L today. Okay, let's be serious. So let's talk about what it takes to achieve results like this. Make sure you follow, like, and save this video right now. My number one tip to any trader is to first learn the foundations of what you're doing. So you have to understand trading, but I want to preach to you all and let you know how important risk management is. It's our favorite topic. And if you are failing at risk management or you desire to be a day trader, I'm letting you know that managing your risk is your number one priority. One of my favorite ways to trade is supply and demand trading. I'm going to show you an example on the chart, and let's talk about how would you apply risk management around it, because if you understand supply and demand, you can take less trades where you don't always have to be in the market. You can make some really good money in a short amount of time and be out. Once you understand trading, you need a high probability strategy that you have proven and back tested, and you have statistical data that shows you are profitable majority of the time you trade this strategy. This is a trading journal that you're looking at. Once you have a high probability setup in the market, you then want to apply a strategy. So this is our price action channel strategy, and price is approaching a very strong supply zone. The white candles on this chart are representing buyers, and as you can see, buyers have gotten a great deal, and this is previously where sellers came in. So if you and I were buyers, we would logically take profit at this level because this is going to attract sellers eventually. Here's how you plan your risk effectively around these supply zones. Number one, you want to go in with very small position sizes. Deep zones tend to have more whipsaw, where these long wicks will take you out, and this is why you want to plan your risk around these areas. Set a clear stop loss just beyond the zone, giving the trade enough room to breathe. In these deep zones, you want to go in with very small lots and then look for price action cues before you start adding more positions. You want to break your risk across multiple entries within that zone. This lets you average into a better price as that zone is tested. Now, deep zones can cause larger swings, so you need to be prepared mentally, because drawdown happens and you need to accept that as a day trader. And anytime you're trading, you want to have a hard invalidation point beyond the zone, because if price doesn't respect the area, just accept the loss and move on. Be sure to follow, like, and save this video. If you are a new or struggling trader and you desire to learn how to trade consistently profitable, just type "Teach Me Kenya" and I will send you our free resources.